Good morning, and welcome to the world of adjusting journal entries. One of the main functions of the accounting information system is to record the revenues and expenses that a business generates. There are two possible bases for recording revenues and expenses, the cash basis and the accrual basis. The main difference between the two is the timing of when revenues and expenses are recorded. Under the accrual basis of accounting, revenues are recorded when they are earned and expenses are recorded when they are incurred. Accounting information systems use adjusting journal entries to ensure they are recorded correctly under an accrual basis. These entries are made to ensure that revenues and expenses are properly recorded in appearance to affirm the matching and revenue recognition principles. Adjusting entries will never use cash. When they are recorded, the cash transaction has already taken place or will take place in the near future. The adjustment occurs at the end of the accounting period to appropriately adjust income and expense accounts, simply matching a portion of income to a specific time period. There are four main types of adjusting entries, including deferred revenue and deferred expenses, and accrued revenue and accrued expenses. Deferred revenue is when cash is received before revenue, such as an insurance company receiving cash at the beginning of a policy. A deferred expense is cash paid before the expense. An example of this comes in the form of prepaid rent, when a tenant pays rent to the property owner for the coming month's rent. Accrued revenue is when cash is received after revenue, such as a phone company receiving cash after a customer has made calls and accessed the internet. An accrued expense is when cash is paid after the expense. This can include electricity that is used and then paid for at the end of a period. Under the accrual basis, cash inflow into the business must not be recorded as revenue, instead recorded as a liability. This is because the business has not yet earned the cash. Now it's time to test your knowledge and go through some examples. Suppose Bill the lawyer is prepaid $15,000 on the 1st of June for work to be completed in July. As Bill is yet to perform the service, the $15,000 he has been paid is recorded as a liability for the month of June. Therefore, Bill would debit cash and credit unearned revenue. Once Bill has performed his service, the general entry for the month ending July would be adjusted, debiting unearned revenue and crediting service revenue. That was a short introduction into the world of adjusting journal entries.